I need to start by doing a few thank yous to some sponsors. We have some folks who have specifically sponsored today, Demo Day, which makes all of what you see here possible, as well as our after event. So thank you to those who generously contributed to help with this particular day. It also can't be, we can't skip past the fact that this entrepreneurial ecosystem takes a village. And this is representative of that village. What's so inspiring about this is that this group really works hard to communicate, collaborate, and make sure that they're filling a space that's not duplicative. We've got great activity going on here, but it's well coordinated, and we need to continue to see how that unfolds. And finally, we'd like to thank those sponsors who are specifically sponsors of Flywheel. Flywheel, as you know, is the startup company here in Winston-Salem that creates and nurtures rapidly scalable businesses to create jobs. It does that with education, mentorship, training, access to capital, and extremely affordable office space, also known as co-working. So today is about that access to capital, and we're going to hear from the folks who've been going through the cohort in the 2018 cohort for new ventures. But before we get there, we've got a couple of things that we want to do. First up, I want to introduce Mac Leistein, who is CEO of Protopia, and Karen Barnes, who is the Executive Director of Venture Cafe, who doesn't have her picture up here because it was a last-minute decision to co-present. And they're going to discuss the collaborative work that's being done by Max and representatives from Venture Cafe, Flywheel, Launch Greensboro, and NC Idea with the Protopia product to bring Triad Connects to life. So Max and Karen.
Here you go. Okay. I don't have slides because I didn't know until 3 minutes ago I was going to be speaking, but that's great. I'm going to outline a problem for you in this ecosystem. If you came to my Venture Cafe talk a little bit earlier, I outlined 4 ingredients that make any entrepreneurial ecosystem successful. Lots of investment dollars, which hopefully are in the room today, a full spectrum of mentors, cheap, affordable creator, startup space, and maker space, which mixers in the house today, and intentional gathering, community building vehicle. So let's talk about that full spectrum of mentors. Many of the entrepreneurial support organizations here were offering office hours as a way to connect entrepreneurs and advisors. And what we all quickly realized is this is not a model that's working any longer. It's too arbitrary. How do we now use technology to get answers for entrepreneurs? So as we were talking about this in the ecosystem, and Peter and Flywheel found Max, and they started demoing this online platform, and it was working. And it's such a radically simple idea because, as Max will tell you, it's better than LinkedIn. It's a way to get free advice, and it's a way, it uses artificial intelligence to link entrepreneurs with their questions with the right advisors who can help give them the advice they need to move their business forward very quickly. So that's the problem that we were trying to solve. How do we connect expertise and entrepreneurs free, fast, and right? And so we created Triad Connects, and it is a regional effort. Flywheel, Venture Cafe, and Launch Greensboro, and we couldn't have done it without the help of NC Idea that gave us a grant to make it happen. So shout out to Tom. Where'd Tom go? So he's out. Thank you, Tom, for the dinero. So today is the official launch date for Triad Connect. So come by the Venture Cafe table, come by the Protopia table, sign up if you're an entrepreneur, sign up if you're an advisor, and here is Max to tell you how it works.
Thank you, Karen. Hello, everybody. My name is Max Leistein. I'm the CEO of Protopia, and we are a B2B software company that connects entrepreneurial communities. We work with Mass Challenge, NC State, and HQ Raleigh, among others. And it really started out of passion to make it very easy for an entrepreneur to ask for help and very easy for an advisor or mentor in the community to help. And so I'm super excited to work with the Flywheel community, Karen, Luann, and Peter, to launch Triad Connects with a vision to really connect all the experts in the community to the many entrepreneurs that are out there that could use help and looking for a leg up, if you will. So let me tell a little bit of how Triad Connects work and how our engine works that powers this. Number one, it is very easy to ask for help. So you send an email, we take that email apart, we figure out who you are, who's asking, what they're asking for. We match you algorithmically to the right advisors in the community, and then ask those advisors to help. Now the entrepreneur doesn't know who we're asking, because the privacy and the time of the advisor is really important. When the advisor responds with help, a call, or a meeting, we pass that on to the entrepreneur and hopefully create the start of a great relationship, because both the entrepreneur wants help and the advisor, the expert, like many of you, want to help with something relevant but also simple to do. What can you ask? Anything an entrepreneur needs. Opening a door at a prospect, the best marketing advice in the area, or who can help with IP. Where is John? So John just signed up. He's an IP attorney. He would be an expert among many others that gets a question on an IP issue that you may have. And John may choose to respond, or if he's busy, he can say no, which is something that's really important for all of us that are busy. And then we share that advice with the entrepreneur, say thank you, and then you move on. There's many advisors in the network. We're always looking for more. All these experts that have done what you as an entrepreneur are trying to do already. And these individuals, believe it or not, they can't wait to help, which is really at the core of what we're doing. Again, I want to give a shout out to the Flywheel team, Venture Cafe, Launch Greensboro, and really also Tom Rui, who heads NCIDEA, for his belief and support of this vision of Triad Connects. Thank you.
Thank you, Max. Appreciate it. So now on to our keynote for the afternoon. I'm going to introduce Tom Rue. Since March of 2016, Tom Rue has led the NCIDEA Foundation, an independent private foundation committed to helping individuals realize their full entrepreneurial potential. Tom spent the first 2 decades of his career as a startup junkie, and the last decade helping others acquire that same habit. Most notably, Tom spent 7 years at the Kauffman Foundation, where he directed the foundation's programs addressing entrepreneurship education, mentoring, access to capital, and fostering entrepreneurial ecosystems. Tom also led the Kauffman Labs for Enterprise Creation, a community resource dedicated to advancing experiential-based entrepreneurship education. Tom was recruited to Kauffman based on his work as the founding chief marketing officer for Jumpstart Inc., an economic development organization and seed stage investment fund created to invest in and accelerate the growth of high-potential, early-stage companies in Northeast Ohio. Since its inception, Jumpstart has helped its client companies go on to raise more than $2 billion in capital, generate more than $2 billion in revenue, and help to create more than 10,000 jobs. Tom lives in Hillsborough, North Carolina with his wife and dog. When he isn't reviewing grant applications or economic development white papers, he enjoys harassing the largemouth bass of Lake Orange. Please welcome Tom.
Hello, everybody. Demo day. Are there 2 words that instill more fear in the hearts of aspiring entrepreneurs than that? Demo day. It's the day we have to come and be measured, to provide proof of our worth, that our idea is worthy of your praise, worthy of your money, worthy of your attention, worthy of buying their product. It's a big and special day, and what I would say at this auspicious gathering is, to those of you who are sweating that, for those of you who've been on the stage, for those of you who will still come on the stage, relish it and appreciate it. Because you're fortunate to be in an ecosystem that supports this type of activity. I myself am appreciative for Peter and Joel to invite me to come here and share some time and thoughts with you, because having this type of infrastructure, these organizations that are well represented in the room, to have them all committed to giving you this forum is not a common thing. You heard briefly in my intro that I did a lot of work for a little foundation out of Kansas City that worries about entrepreneurship on a global scale. I got to do work with groups like the World Economic Forum, the Vatican, the United Nations, the State Department, where we worried about such things, entrepreneurial ecosystems. And you would be amazed, you'd be forgiven if you live here, if you didn't know how rare it is, not only in the US, but globally. So congratulations to the organizers, the sponsors, and again, thank you for the privilege to be here. But really, at the essence, what is Demo Day? It's a demonstration, the action or process showing the existence or truth of something, right? Proof. I've got proof. Now, proof is subjective, as we know. And proof can come in many, many different ways, and that obligation for proof should be resting on not just those up here on the stage, but those who seek to benefit from your energy. So my challenge at this moment for the ecosystem, whether that's Peter, Joel, Karen, Luann, Margaret, Sam, Scott, Ken, Andy, Justin, and anybody else that I'm forgetting to list, is I challenge you to prove yourself worthy of the people that you're seeking to serve. Because it is a privilege to do this work. I was in Wilmington 2 weeks ago, and I was asked on the stage, what do I get out of this, the work we do at NC IDEA? And I reminded them that I get a lot out of it. Maybe not money, because we don't do equity investments. Our dollars are free. And just out of curiosity, show of hands, how many folks have received in some way, shape, or form NC IDEA money? There's a few hands. I was very proud to see several of the companies that just pitched before I went up that were all NC IDEA grantees, Freeman, Neighbors, Urban Offsets, for example, and several community engagement partners. But the question that comes for that is, are you worthy to serve the people that you seek to serve? That's the virtuous cycle we try to perpetuate in this activity. And that's why I say what I get out of this is the benefit, the privilege to do this work. Because it really is. I don't have to worry about, did I make my quarterly numbers? I don't have to worry about where the market closed on a given day. I have to worry about how many people did I help fulfill their full entrepreneurial potential. And that is a fun thing to do. So how do we do that? How do we determine what is the best thing to do to help people? I like to go with the proof of data. And I ask the question, what does the data prove? So to baseline this conversation, there are 3 data sources I'm going to touch on today. 2 of them coming from the same organization, the Economic Innovation Group out of Chicago. It's nonpartisan. You got R's and D's. It's purple officially. And they've been doing a lot of research in this space to help us understand better what are the levers that we can pull on to affect people in pursuit of these entrepreneurial ambitions. And the first thing I want to touch on is their Distressed Communities Index report, because another thing that would be very easy to do doing this kind of activity is get lost, in what you're doing. And by that I mean not realizing that even though we live in this world of entrepreneurship where 24 hours a day we're focused on doing our tasks, we still live in cities, communities, ecosystems where fellow human beings are affected. And in the report, the Distressed Communities Index report gives us a snapshot of what North Carolina looks like. Now, I do this for a living, and I was surprised by this. I wonder if others might be as well. But North Carolina, if you have the good fortune of living and working in the Triad or in the Triangle, or you're part of the Mecklenburg cabal, you'd be forgiven if you thought things were really, really going well in North Carolina for folks. Well, in fact, 25% of the population is operating and living with economic uncertainty. That's 1 in 4. We count off the room right now, ask how many people, or count 1 in 4, that's how many people go to bed every night with some level of economic uncertainty. I think that's important because as we labor to be successful, however we measure that success is only going to be limited by how much of the community gets to participate in that success, namely in job creation, tax base, paying the infrastructure that we all like for healthy communities, right? And strong communities. If you want to get more granular, you really start seeing there's a tale of multiple, there's 2 North Carolinas, right? Here it is by county. You can guess where the big dark green is, right? Triangle, Triad, a little bit on the beach, little pockets out there in the mountains where we all like to go for fall and beer. But look at the vastness of the state that doesn't enjoy that doesn't have that kind of economic stability. How do we, if you were in my shoes, how do we do something of impact there, right? We're working on that right now. We have an ecosystem partner grant that's out there. There's a few people in the room that are waiting anxiously for our decision on this. In a couple of weeks, we'll make our announcements. 12 to 14 organizations will receive $100,000 grants. And there'll be 12 to 14 organizations that think I'm brilliant. And then the 20-ish that won't get a grant will think, well, they certainly won't think I'm brilliant. I guarantee you that. But if you are in our shoes and you're trying to figure that out, what do you do? Right? What do you do? We call it, right now we're euphemistically referring to it as the East of 95 strategy. So pretty much that, where the red wave starts is about where 95 carves off the east part of the state. What do you do out there? There's counties in this state that have less than 5,000 people in them. You know, we could get a bunch of well-intended people that are like the organizers behind this effort to host something like this, but in a county of 5,000 people, you can get 3 people to show up, right? It's going to take a different lens, it's going to take a different level of thinking, a different set of tools, so that we can better serve what we are referring to as the community of the underserved, under-resourced, under-accessed. We just completed a 1.5-year-long strategy exercise with leadership from the board. I'm very fortunate to have the board that I have. And we said, you know, what we've been doing is pretty good. This $50,000 seed grant cycle that we've been doing for several years now, we've helped 132 companies. We've deployed over $5 million in capital. Collectively, those companies that received it have raised over $300 million in capital. They've generated like 1,200 plus jobs. Great vanity metrics, right? Yada, yada, yada. We can feel good about that stuff. When I got here a little while ago, I started meeting with some of our grantees. And the successful ones, the companies that exited, so to speak. And I had an epiphany. These people were really bright. I'm sure you noticed that, Carl and Sean and our grantees that were up on stage. They're really, really bright. And it made me think really hard, like, were we catalytic in helping their success, or were we more accelerant, right? Because you could be seduced with the vanity metrics. You could feel so good, you can strain your arm, patting yourself on your back. But I've been doing this long enough now to know that that's a false sense of confidence. So as we rethought where we might have impact, the board really gave us the charter to say, what you've been doing, it ain't broke, so don't fix it, per se, but figure out a way to do more and help more. And so that's been influencing things like our new microgrant program that we did in June. We gave away 15 $10,000 grants to people that were way earlier stage, right? Way earlier than we would normally do. And you're going to see some of this new direction expressed in our ecosystem partner program and the grants we make there, so that we can hopefully do something in some of these orange and red areas of the state. Now, lest you think you're off the hook, you're not. Because one of the ways we're going to do that is first we have to lead and show and demonstrate. So we'll be dragging folks to these areas to help. And rest assured, for the organizations in the room that applied for an ecosystem grant, when you get one, part of it, the catch with it will be is to help us figure this out. Because that's part of the thesis of this action, is that together as a cohort, we can do more and think more. You know, when we do our quarterly summits with the existing cohort from 2 years ago, we conclude every partner presentation with an ask and an offer. I offer this on behalf of, and Luann's always great, she's the cheerleader, where are you? She's the cheerleader of the Triad, and, I can do this, we can do this, the chamber can do this, right? And then the ask is, what do you need help with? Open yourself up to that. Be open to saying, listen, I could do better if somebody could help us do this. We do that with every round, and we're going to be doubling the size of that cohort to do more for the state. Gotta check my time. Peter said I only had an hour and a half. Cool. Okay, so there's that part of it. If we ignore that, we ignore humanity, and our growth is shallow for it. So as long as the board's keeping me in this job, that will always be a priority for us. Here's the other report that came out the same year. And this one, again, I say I do this for a living, and this one surprised me. And I don't know why I shouldn't have been surprised by this. I should have actually expected this. Dynamism in retreat, consequences for regions, markets, and workers. The net, for those of you who don't find this stuff, for me, like white papers like this are like porn. My wife's yelling at me at 1 in the morning when I'm in bed, not quite with the flashlight, but I have my little nightstand light, and I'm reading this stuff, and she's like, turn that off. But this stuff was fascinating because what it's really showing is a very alarming thing. The aggregate level of churn, and churn being defined as the number of companies that are exiting, going out of business, just closing up shop, versus the number of starting every year. First of all, you can see the trend line for both numbers, right? And I know it's a bit of an eye chart from back there. And the data stops at 2013, so there's some facile variation going out in the last couple of years, but it's not, where it was once upon a time. But that's like the canary in the coal mine for the resiliency of the economy, right? And the alarming numbers, super alarming numbers, when that, the startup rate goes beneath the closure rate. Think about that. That means we have net loss. And considering that the majority of all net new job creation in this country comes from startups, from companies 5 years old or younger. Think about this, right? If you're General Electric, and you're a slave to shareholder equity, share price. So the mantra is productivity, productivity, productivity. What is productivity? Productivity is doing more stuff with less people. You do not get incentivized paid bonuses by hiring a ton of new people, right? If you're a startup, that's all you can do is create jobs because you need somebody to build what you're selling, right? That's the churn. Now, we get, again, as a society, we get seduced because we see exciting news like this. We've now had 2 companies that hit the big T, trillion market cap, right? And apparently Apple stayed up there. I don't know where Amazon closed today. Does anybody know? Are they above? They hit it, they got up above, and then they slid back down. But fear not, Jeff Bezos is going to be okay. I just read this the other day. I didn't know this. It crept up on me. Do you know his net worth is Bill Gates and Warren Buffett combined? I'm like, holy crap. I remember when those guys were rich, right? Lest I be, misquoted, we have media in the room. I'm not shitting on this, on big business, because you look at these names, these were great entrepreneur success stories, right? This is not, I'm not vilifying this. What I'm saying is it sets up a false narrative that starts having policymakers thinking differently and weird. This is what feeds that cycle of, let's bribe Amazon to come here, right? We're going to put billions of dollars into an incentive package, and we're going to get them to come here, to drop their magic factory right here. And boy, has that been in vogue lately. And I cannot express to you, in my humble opinion, insert my disclaimer here, how stupid I think that is. For one thing, if you look at the ROI on these deals, they rarely, if ever, pan out to the promise, and the cycle is measured in decades, not years. So Foxconn up in Wisconsin was a big example. I think it was $5 billion when that was first announced. Scott Walker did that deal. And it's 20-some years, assuming every assumption at the point of inception pans out, right? Now imagine if you took a quarter of that, $1 billion, and you put that into early stage startup activity, entrepreneurial ecosystem support. You could birth multiple Amazons. Yeah, you have to be patient. Yeah, it's going to take some time to build. But guess what? When you do it in a patient fashion, you can assimilate it, right? Because I don't know about you, but I don't know, is traffic an issue in North Carolina? Now let's drop a 50,000 employee company in the middle of all that versus growing over time where everything gets assimilated and there's a loyalty, a regional loyalty to startups that are successful and build their wealth in the region that they started. What does it say that we're recruiting a company that's willing to have an open bidding process? I'll go to the highest bidder. The 7 years I was at Kauffman, I got to see this firsthand. We refer to it in the terms of economic development as smokestack chasing. And because Kansas City is a city divided at the state line, Missouri and Kansas, there was a common practice of raiding each other, and you would see firms doing this routinely on whatever cycle, 5-year, 6-year cycle. AMC, the movie people, were my favorite example. Forgive me for not remembering which side they were on when they made the move, but they made one of those jumps, and it was like the second time they had made that jump. They got about a $40 million incentive package. I think they went back to the Kansas side. They got a $40 million incentive package to go back to Kansas, and then that year, that budget, the Kansas budget, had to cut $38 million out of education. What's the net of that? That's a race to the bottom, folks. What you're doing, what we're doing, this is economic gardening. This is investing in the future, which is why it's important we need to do that. Again, not vilifying them. Everybody that's going to be on this stage hopes to be a trillion-dollar company at some point. But they'll do it here, and they'll be loyal here because of that. So let's get granular on North Carolina. This is a data set the Kauffman Foundation has been funding and maintaining for years. There are 3 primary categories: growth entrepreneurship, startup activity, and Main Street entrepreneurship. These data points, 18th, 9th, and 14th, these are of the 25 largest states. So there's a pretty clear demarcation in data, so it's not fair, if I can use that word. It's not fair to compare, all the states when there's so many that, we have counties. Like we could combine 3 counties and have the same population as several states. So Kauffman slices the data to say 25 largest states. And of the 25 largest states, in growth entrepreneurship, North Carolina is 18. Not a great number. 9th in startup activity, respectable. 14th in Main Street. You guys probably don't care so much about that last one, Main Street. I think most people here are worried about startup activity and growth. I'm caring about Main Street because, as I mentioned, when we start thinking about these outer regions, sometimes that is the only form of entrepreneurship that's going on. So we might have to come up with a strategy for that yet. I don't know. It's a work in progress. But this is, let me give you just some specificity around this. This is the rate of startup growth. This is the pace at which startups have grown as a cohort on average 5 years after founding, measured by employment. Again, without knowing the exact bubbles, you can see the trend line, right? Now, some of this could be productivity, all you guys doing app startups don't need tons of employees, but it's not just that, and it shows, again, a trend that's not something we want to perpetuate. The one that I'm more concerned about is the rate of business owners. percentage of adult population that owns a business as their main job. You know, we have lost or are losing our entrepreneurial appetite. One of the things I did at Kaufman just before I left was I launched a new curriculum, an entrepreneurial curriculum called the Ice House Entrepreneurship Program. There's probably a few people in the room that remember a thing called Fast Track. It was a CED, was a big pusher of this curriculum, was a Kaufman curriculum. Think of it as a, you know, business startup 101, the mechanics of starting and growing a company. You know, how you write your business plan, how you do your marketing, sales, and all that good stuff. When I was there, I kind of did a gap of all the curriculum programs that were out there that existed to support entrepreneurship. And frankly, if I'm being honest, there was plenty of stuff better than Fast Track, and Kaufman knew this too, because it exploded on college campuses, right? Kaufman itself put $40 million through something called the Kaufman Campus Initiative and gave this money to poor little schools like Stanford. You may not have heard of some of these schools, but Carolina, UNC, there's this school down in Chapel Hill. MIT stands for Massachusetts Institute of something. I'm being obviously snarky because what we did is we spent $40 million to figure out that everybody's pretty much ripping off Steve Blank. This manual's been written a couple times and iterated, which is all good and fine. I'm not denigrating it. Like, we need that. There is value in that. And the accelerator programs that are out there that teach this stuff, it is good stuff, right? But what was missing was kind of this component that we called entrepreneurship mindset, right? Like, what should I have known before I even worry about building a company? What does this mean that I'm putting myself on this path? It starts really getting into sense of agency. You know, what do I know about myself? Do I have an internal locus of control versus an external locus of control? And because I had Kaufman money, we consulted all the experts, right? Carol Dweck, Dr. George Land, to name a few. We created a great program. We went out there with this thing called the Entrepreneurial Mindset Program, which was the Ice House program. Here's the point I'm getting to, how we've lost our mojo. When we launched this program, we thought first community colleges would be the best channel because they don't compete, right? And by don't compete, I mean, in particular in the Triangle, there's this one school called Duke and this other one called UNC. And apparently there's a rivalry that goes on between them two. I'm a Yankee from Cleveland, so I don't know, but I kind of get a sense around, especially in the basketball season. They compete. They're never going to take a program that's good enough for everybody because they have to differentiate themselves. Community colleges don't. They compete only geographically, so they serve a localized area. So we said, let's go to community colleges, let's get them to adopt this curriculum, let's put it out there. We started getting a little bit of international interest. So we went ahead and made a Spanish version of the program and said, okay, if people want to come and see it, we'll do it. Initially, in some schools, it could take up to 2 years to negotiate a $10,000 contract for a pilot program to have 25 students go through it. Okay? Anybody in academia here? Higher ed? A few of you? You know this pain, right? What does it take to put a new course in the catalog? It's not simply a matter of just doing it, as Nike would say. And you could do it taking a knee or otherwise. Wow, nobody getting that reference? Come on now. It doesn't get any better, folks. You might as well open up the bar. So 2 years, 10K, 25 students. When this started going international, I remember going down to Monterrey, Mexico, Tec de Monterrey, which is like the Stanford of Mexico, 34 campuses across the country. Their pilot program was 10,000 students. It was a $600,000 contract that we negotiated in 60 days. This curriculum is now being taught on 5 continents around the world. I've taught faculty in Medellin, Colombia, in Guatemala. The appetite, the benefit of our unique American style, and I'm sorry, I don't mean to wrap this in a flag, and I sure shit, I'm not going to hug a flag, even if there is one on the stage. That secret is getting out. And present company excluded to this comment, but for too many here, we've just become blasé about entrepreneurship. And this gets important when we get into crazy times like we're about to get into in November. Okay? And by crazy times, obviously, I mean political times. Because there's political rhetoric that's not founded in data, that conflates arguments, that conflict our common interest to make ourselves more entrepreneurial. Most notably, the fervor around immigrants. I can point you to data at Kaufman.org that will end the debate. It's been studied ad nauseum. Immigrants in this country are 2.5 times more entrepreneurial than native-borns. It's fact. About half of the Fortune 500 companies are led by immigrants or children of, first-generation children of. If I had the proverbial magic wand, this anti-immigration notice that we have, we're sending out, people highly trained, highly educated, highly motivated. If we're up to me, every immigrant that's doing graduate study in the U.S., upon graduation, I would staple a green card to their diploma. Say welcome. That's a fact. And so if you are, and I'm not trying to bash R or D, you might guess where I lean on that, but that notwithstanding, my charge to you is understand the data, okay? Because sometimes the agenda you push is ironically and weirdly against your own self-interest if you don't understand the data. Sorry, I got all heavy there for a second. So let's finish up in a less heavy way. So why do we do what we do? And what's the logic behind it? He says, winking, logic. It's subjective. I fully admit that. We had the ecosystem partner grant out on the street right now, and I'd get these coincidental, accidental bump-ins, and people would very sly, this Peter is exempt from this. This isn't him. I'm not talking about him at all. But I get these sly inquiries, they're trying to triangulate. What's the secret? How do we get a grant? Just tell us, right? And our seed grantees do the same. And for those of you who have served us like Stephen has as a reviewer and Luann has as a reviewer, any other reviewers? John, you've been one. It's subjective, right? I'm not suggesting we just make this stuff up as we go, but it is subjective, especially on the ecosystem side of it, because we don't know what makes the best and most sense until we spill it all out on a table, right? And we can see the pieces, parts, and say, oh, well, that group's doing something that complements what this group is doing, and what if we encouraged, this to happen? Or based upon our gap, we see this, that, or the other. It's not that we're trying to be evasive. It's not that we can't tell you how to win it. It's that we don't know. We are not experts in this per se. We're pretty smart. We've done a lot of this in the past. We've done the gap analysis. We're doing what we think we need to do. But all of that goes into a mixing bowl, and that comes out to this strategic portfolio of grants and programs. And very quickly, I'll just wrap up by saying what those are. Think of it as, in the parlance of your B-school education, we have a B2B and a B2C strategy. Our B2C strategy are the programs that go directly to the entrepreneurs. Most notably, our $50,000 seed grant program, our micro grant program. Those are when we're writing checks to entrepreneurs. And then there's where we're helping entrepreneurs directly. And those are Labs, which is our accelerator program, SOAR, where we work with specifically female founders on the unique aspects of building their business, and LEAD, which is a newer program where we're helping folks kind of have already made it now out of the gate, and you're now trying to grow. That's our B2C, where we work directly with the entrepreneurs. Our B2B program is where we work with organizations, many of them represented here today, that are helping people do likewise, right? So what we're trying to do is help their capacity and put their learning into a shared learning pool so that we can all get smarter about doing this. Because if there's something I've learned in the time I've been at NCID, it's this. There is significantly greater need and opportunity to help people flourish, entrepreneurially speaking, than there is capacity to serve it. And if we truly are committed to making a change in North Carolina, we're going to have to figure out how to get greater resources to help more people. We had 34 ecosystem grant applications. We're going to make 13-ish awards. That doesn't mean that 20 were unworthy. That means I only had so much money to spend and we had to draw a line. Other states are figuring this out faster than we are. I come from the Buckeye State, where years ago they did this thing called the Third Frontier Initiative, right? Here, if we can get $5 million to do something that's, supporting early stage, it's like manna from heaven. In Ohio, the Third Frontier Initiative has been approved by voters twice and has so far pumped $1.4 billion into early stage activity, such that the company you heard in my intro, Jumpstart, that I was one of the founders of, they're very much like NC Idea, but instead of grants, they make investments. They now have a 9-figure balance sheet because of it. Matter of fact, last year they had their first unicorn exit, right? That's big, bold thinking. And I'm going to now deputize you all to think that way in what you do and use every opportunity you have to elevate that thinking within your city, within your community, within your county, within your organization, because hopefully change is coming, and that change is going to take us to the next level. So with that, I say thank you for your time. If you want to get a hold of me, there's all my digits. Thank you, brother.
So let's give another round of applause for Tom. If you couldn't tell, quite a bit of what we're inspired by is the work of the NC Idea Foundation. Those guys work tirelessly, effortlessly, statewide, and they're focused on the real problems based on real data, and we really appreciate what they do day in and day out. So, I'm Peter Marsh. For those of you that haven't met me, I'm one of the partners in Flywheel, and I help administer the New Ventures Fund, which is a modest, small little capital raise that we undertake every year in this community to assist in the creation of 5 startup companies on average each year. We run a community of entrepreneurs at our co-working space, which is called Flywheel, and we see startups form within that community organically. New Ventures is more of a structured program for the creation of startups. So we engage in an organic method and a kind of a deliberate method. So today I want to tell you a little bit about the deliberate method. So if I assume that a lot of you all are on our email list. We sent a couple of email blasts out this week, and to us they were very meaningful. This is how it gets done. So a few years ago when we started this program, there was very little activity in the ecosystem. And in a very short period of time, programs have formed, buildings have been built, upfits have been undertaken, all kinds of infrastructure has been put in place, and all kinds of personal investment has been made by the entrepreneurs in the community to make sure that our demo floor is full and that the New Ventures program is as strong as it can be. So the New Ventures program has 3 components. We run a challenge. Basically, the challenge statement invites anyone with a technology idea, whether it be software or device-oriented, that intersects with the strengths of our industry verticals in the region. So healthcare, IoT, microelectronics, aerospace, sustainability, textiles and apparel, to name a few. We invite companies that have ideas in that space to submit applications to gain entry into our accelerator program and have an opportunity to get an investment from the New Ventures Fund. This year we had 357 applications for the program, which was a 50% increase from the prior year and about a 300% increase from our first year. So we must be doing something right because, quite honestly, the traction is really increasing in terms of both quantity and quality of the companies that are applying, and also the geographic range. So the brand has some equity in the marketplace, and it's getting better and better known, and that's a good thing because that brand being known creates an opportunity for these companies in the front row to get connected to developmental programs that will assist them after we're done and to get connected to later stages of capital. There's the accelerator program itself, and I'm not really going to talk about that too much because Joel Bennett, the director of our accelerator, is coming up next to tell us about that experience. And then, of course, there's the application of capital to this effort. So I want to talk a little bit about all three, really. And I'm going to do it in the context of the e-blast that we sent out. And what I really want to talk about is what happens behind the scenes with New Ventures. I can tell you that this is not easy. There is no easy button in raising capital, in running a business challenge that gets that kind of an application pipeline, and running the accelerator itself. This is incredibly hard work, and it would not be possible without this, our investors. So if some of you are here that are in the New Ventures Fund and you're not on the slide, I think we're running out of room in order for the headshots to be visible. So come talk to me afterwards if we accidentally omitted you. But these are the participants in the New Ventures Fund. These are wealth creators in the community that basically have decided to do the hard work in the form of putting their capital, their time, and their energy into this program. There are two kinds of wealthy people in the world, I've learned. There are people who create wealth, and there are people who create wealth and give back. And everybody on this slide falls into the second category. These are wealth creators that are concerned about the development of this portion of the community, this important economic development mission. So these guys kind of all fall into the second category, and I would urge all of the entrepreneurs to think hard about that. Because if you are successful and if you achieve wealth creation and a high wealth position in life, you're going to find that you reach a moment where that's not all that meaningful. What is meaningful is giving back at the end of the day to create companies like the companies that are coming through the New Ventures program. So I would like to hear a round of applause for all of the investors involved in the New Ventures program. So, okay, I got to go back. So before we talk about the first three cohorts that have come through the program, I also want to thank some other people that have worked incredibly hard on this program. John Mayhew with Erdos IP Law just moved up to Baltimore, I think, with his wife, who is in the medical community at Johns Hopkins up in Baltimore. But John deserves a huge round of applause because without him, we would not have the legal structure behind the New Ventures program, nor would we be able to do due diligence. How much fun was that, the due diligence part? So when these companies came to us in the program, this is the hard work that I'm talking about. When these companies came to us in our program, we asked them to forward to us all of their organizational files, their contracts, which is all part of the due diligence process. And I think we just finished that last week. So it took over 4 months to basically clean up their contracts, clean up their owner agreements, make sure that they had the proper organizational documentation, and in the case of one company, to actually get the company incorporated and formed. This is hard work. You know, going through the diligence process is not at all easy, and John Mayhew, he does send us a bill, but it has absolutely no reality in the legal billing world. I mean, he puts a tremendous amount of time and effort. He will continue to represent us from Baltimore. That's how strong that relationship is. So give a big hand for John Mayhew. And then the second entity that works behind the scenes is Bernard Robinson, which is a accounting firm in the market that is also a loyal supporter of Flywheel. Bernard Robinson does the audits. So part of the process that we take our new ventures companies through is their very first audit. We audit their books. In some cases, it doesn't take much time because they literally formed last week, so the financials aren't that complex. But in other cases, the company's been in business a year, even 2 years, and the audit is more extensive. So the auditing process and the diligence process prepares these companies to get ready to talk to real investors and to go out in the real world with clean data files and the proper preparation to interact with a business community that basically doesn't cut you any slack. If there's a single red flag in your file, you're toast. Right, Malay? So this is a lot of hard work. And again, I'd like to give a big round of applause to Bernard Robinson for doing the audits for New Ventures. And then last but not least, I know Joel is going to recognize these people as well, but we have a number of interns. Okay, I'll let you do the interns. I just want to personally recognize Andrea Howell, who manages Flywheel, runs the operation, makes sure that the lunches are delivered on time, and more than that is kind of our group therapist as we go through the acceleration process, because there are highs and there are lows in this experience, right? You come to the accelerator one day, you've just had a great customer meeting, you've got somebody that commits to your beta test, or you close a contract, and the adrenaline is really rushing. And then the next day, we do a pitch scrub and tear it to pieces and say, this is ridiculous, your MVP is awful, and you need to completely redo your pitch deck, right, guys? So the accelerator experience that we run is run with an investor mindset. The whole idea is to get these guys ready for the higher level of private equity firms that they're engaged with. And the whole idea is to make sure that they have done as much customer discovery and as much customer engagement as possible so that somebody else has told them that they'll pay for their product, right? So this is really hard work. It can be extremely frustrating. We generally have a meltdown in the accelerator about 6 weeks into it, where we hit our low point, and then we start rebuilding and building the product, focusing on customers, and getting ready for demo day. So I'd also like to thank the cohort companies for understanding that, for putting up with the highs and the lows and everything in between, and basically getting to the point that you are today and being ready to go out in the real world, in the real marketplace. So give a big hand for the big cohort companies. So we're now on our third cohort. You have heard from a couple of these companies along the way. I'm not going to get into the weeds and the details. At this point in time, more than half of our companies are doing extremely well and have raised follow-on financing now in excess of $9 million. One of our companies is currently in a pretty high-level raise. So they're doing well. We report this out to the investors. We track their progress on a quarterly basis. We update their cap tables. And without further ado, I'm going to introduce Joel Bennett, the director of the Accelerator. And I want you to know that Joel scripted the event. So what I'm about to read you was written by Joel. So this is Joel's own bio. And I'm going to tell you why I said that in a minute. So Joel is a seasoned innovation consultant and designer. He's an artist and industrial designer with nearly 3 decades of experience in product design, graphic design, marketing, branding, and holds 12 US utility patents. Over the past 5 years, he's been focused on startup acceleration, new product design, user experience, and inception stage companies. He himself deploys and guides others in design thinking, user-driven design methodologies. He's mastered the process of iterative, lean startup methods and helping organizations create great things. Joel's designed vacuums for Electrolux, trucks for Volvo, but he told me his favorite work is exploring the world of color. He actually didn't tell me that, I'm just reading this. Frequently is asked to consult with mentors and others on individual projects, as well as creating and fostering culture of innovation through startups and growth accelerators. Now I'm going to tell you the real story about Joel. So I've known Joel now pretty well for 4+ years. He is as passionate about how it gets done as anybody in the community. He works incredibly hard for these companies to the point of insanity. He has been up, I think, for almost 3 days straight, making sure that the decks are as good as they can be, doing whatever the startup companies need, and making sure that this event is pulled off as professionally as possible. So in the green type here, it says, and I hope you will, raise your hands for this one. Hoot, hoot, the crowd roars. Please welcome Joel Bennett.
That's funny. That's very nice. Very nice. So I think I'm blushing. I hope I'm blushing. So let me collect myself. Well, I got a nice group here. It's nice. It's a nice day, too. Okay, so I put a slide deck together, but I'm not really sure I remember much about it. I'm going to try to stand here and focus a little bit. I've had a long couple of days, like Peter said. So there you go. All right. So it's just like last year, right? So how did that even happen? So now I got to figure it out. See, I told you. There is no slide deck. Nice. Oh, we got the wrong slide deck up here. Yeah, nobody told me that. Okay, so sorry about that. Oh yeah, we're going to change the slide deck. So it's no wonder. Ah, here we go. So, if I asked you all to stand up, would you promise not to leave? Stand up, okay? Everybody stand up for a minute, all right? So, oh man, who's got a cell phone? You got a cell phone? Give me a cell phone. I want to take a picture. So this is awesome. So everybody raise your hands, okay? Just raise your hands and go, wow, this is incredible. Go ahead. Wow, this is incredible. That's a great picture, Dawn. Thank you. Have a seat. Okay, so we're here now, all right? We'll get started. I feel much better. Don't leave. That guy's leaving. Here we go. So I met this guy about 10 weeks ago. He called me up about a month before that, and then he called me up again, and then he sent me an email, and then he called me again, he left me a message, and he said, please call me back. I want an internship for the summer with the accelerator. And I was busy, you know, and so then he texted me and he said, hey, what's up with that internship? I'm going out of town. And so the most tenacious individual I've met in years just wouldn't give up. And so Tuan Vo, is the photographer that did all the photography for us and all kinds of other stuff. So we were up all night last night till about 4 or 5. And the night before that, till about 4 or 5. And the night before that, 2 or 3, right? So I wanted to thank Tuan very much for all his work. So Tuan took this beautiful photograph of Andrea. There she is. Hey, Andrea. So Tuan's a very talented photographer. So you stole my thunder, but I appreciate that, so it's okay. And then we had another intern. Is Netzer here? Netzer, where are you? All right, see, I told you I got that cute photograph of you, and Connor next to him. So these guys helped keep the wheels on the bus all summer long. It was really great, so I wanted to give them a shout out. So this year was the third year, the third cohort, and I kind of characterized it 3 ways. I said that this cohort was courageous and spirited and very much self-determined. And, and I mean that sincerely. They gave me a run for my money this summer, and I think that you're going to see the results of that very clearly in the work that they've done. And if you were with us at the beginning, the progress that they've made. And I have a lot of respect for this cohort. I think that they're courageous because of the process that they put themselves through. And it starts out very difficult, where we're looking at this massive people, this massive John Malkoviches, and they all look the same to us. And so through this process of investors reviewing applications, and they come in for all these different, gates to get vetted, we finally figure out this is going to be the cohort for the year. And so it takes a lot of courage just to even get in the program, of all that possible rejection you encounter, all the work that you got to do. Because there's a lot of steps that these teams go through just to get in for the 12-week program. And there's a lot on the line. There's this exposure, there's this prestige, there's this introductions to investors, there's the early capital, there's the opportunity to start a business because you're focused on it all summer. So 340, I think that's what Peter said, right? 340 was the number, and it got narrowed down to 5 teams. And I think that that's an incredible ratio. I think it was like 1.4% maybe. So this is what I think about when I think about this cohort and our community and what we're doing here together, is that we're identifying this really very fragile talent, and we have an opportunity to share this as champions. Like, we're championing them safely through the community so that everybody can see what's possible when you really apply yourself. So that's like I got out of order. So last week, something happened last week, and I really wanted to share it with you. 3 times last week, somebody reached out to me. So this guy reached out to me on LinkedIn, and he wrote me, said, "You played such an important part in me staying on my path. Thank you for believing in me, being tough on me when I needed it, and always encouraging me to reach higher." So he was one of the first people I worked with in the Triad Startup Lab. And I think what Tom was saying about this is the opportunity for being a mentor, for actually cultivating somebody's opportunity that they would not normally have, is being a champion for them, speaking out for them, showing the community who they are, encouraging them, being tough on them when they need to be. It plays a vital role. And if there's anybody in this room that's been thinking about it, like getting involved in Triad Connects, this is the reason that I am involved in it, is because it makes a difference to people. I got this letter in the mail last week. It's written by somebody here in the room. It says, "Just wanted to say thank you for helping me with the design of the Triad Connects logo. It was a huge help. As a startup, these gestures are not only incredibly meaningful, but critical to success. And I agree with him completely. And that's why I do what I do. It's not because of the money that I'm getting paid or standing in front of a room talking about it. It's because I love helping people. That's the only reason. I've always been that way. I've never been focused on my own projects. I'm always interested in what you need and how I can help you. That's just my personality, and I kind of fit into that really well. But when I get things like this, or I get that somebody reaching out to me on LinkedIn, it all makes perfect sense to me. That's what we're here to do, is to help each other. So when I design these beautiful graphics, nobody's paying me to do that. It's because I'm looking for people who are passionate about excellence. I want to attract the right kind of people to apply to the accelerator, because it's not meant for everyone. And when I travel around the state and I talk to people, I'm looking for a couple of really important sort of characteristics, that kind of separate them out from all the other John Malkoviches out there. So when I have an opportunity to design something like that during the cohort, it means the world not only to me, but to this team that I'm working with, or that. To see them go on and succeed and raise more capital, this is the most fulfillment that I could ever receive in this role. So I want to tell you a little bit about myself and why I do this. And someday, if we continue to do this, if we continue to parade these little ducklings out, sooner or later somebody's going to hit, and they're going to hit big. So it might not be real fast, but sooner or later they're going to. So it's a really simple process, the accelerator. Get in, right? Get through the due diligence, sign the contract, and collect your first check, right? And then halfway through, right, agree to the things that you said that you're going to agree to do. And we set these milestones up, and everybody reviews them, and you get another check. And then today, demo day, right? Deliver on what you promised, and you're going to get another check. It's really that simple. But this cohort, this year, made this process really difficult. This was a really difficult process to get through because these folks were so self-determined. They were so strong in their will, and I love that about people. So I think that the best entrepreneurs that I've ever met are just like that. They don't want to be told what to do. They've got their own ideas about where they want to go and how they want to do it. And I'm there to check them. I'm there to say, are you really sure about this? Because you said you were going to do that. Or are you really kind of just full of shit, and you're not going to deliver on that promise? I'm proud of every one of you. I'm proud of every one of you for cooperating or not cooperating or checking me. It was a very good summer for all of us. So I wanted to have that moment up here in front of everybody and tell you how I felt. So appreciate that.